Hi, Mike Flores here, co-founder of Trade Prosper, and welcome to Section 6, the Money Filter, ADX. Now, ADX stands for Average Directional Movement Index, or Average Directional Index. It was created in 1978 by Wells Wilder, and it's an indicator of strength in a trend. Now I'm going to show you why we want to use an ADX filter to help us before we place the channel breakout trades. The reason is we want to be able to catch the major trend. And again, what the ADX does is it tells us whether we have a trend or not. And it keeps us out of trades that are not trending at the time of entry. Now remember, the ADX does not tell you if the market is in an uptrend or a downtrend. It just tells you the strength of the trend. So now let's go to the charts. Let's take a look at a quick example, and I'll explain to you more about the ADX, how it works, and how we will incorporate it in placing our 55-day channel breakout trades. Okay, what we have here is a chart showing the futures of coffee, the coffee futures. Now, I zoomed in a bit so we can see the price action a bit clearer. And what we have here is the green and red price action bars, which is the price of coffee on any given day. We have the 55-day high here in black. The 20-day high is overlapping the 55-day high in this example. And we have the 20-day low, and below that, the 55-day low. And you can see all that to the left of the cursor. You see that it corresponds to where it is on the chart, which is pretty nice. Okay, now below that, I have the ADX filter already on here. So let me remove it and show you how I got it there. So what I did was, instead of clicking on the wrench, I'm going to click over here. Now the reason being is, whenever I want to add anything to the actual price chart, I click here. Whenever I want to add anything below the price chart, I click here. So now I have indicators, and now I literally just choose the indicator I want. They're in alphabetical order. So I scroll down to ADX, I click on it, and then I click Add. This box pops up, and the number of periods is default setting at 14. We're going to leave it at 14 because that's the original level that Wells Wilder used, and it's the most commonly used in the industry. So we X that box out, and now we see the indicator is there. Now, Pro Real-Time is a very versatile system, and it allows us to resize that box. So I pull the ADX down so it's a little bit out of the way. And now I want to talk to you about the ADX. So we see here we have a blue horizontal line running across here. This is called the 40 line. Now more on the 40 line in another video, but for now, what I want you to know is that the ADX works on a scale of 0 to 100. Now rarely will you ever see it go above 60, but in this example you see it does go above 60, which is why I showed this to you. Now, when the ADX is above 20, the market is considered to be trending. And when the market is below 20, it is considered to be in a trading range. So, using the ADX, we want to make sure that the time that we place our 55 channel breakout order, that the ADX is rising, meaning that it is in a blue line. It is not red like over here. Now, let me show you that in more detail in a moment. First, I've already given you one rule in the last video, the sideways setup rule. Before we place a channel breakout order, a 55-day channel breakout order, we are looking for a sideways setup, which means at least 1 week that the horizontal line of the 55-day high or the 55-day low is there. And you see that we have this. The 55-day line is horizontal for more than 5 trading days. Okay? Now, the next thing we're looking for is to see if the ADX is rising. And we see that the ADX is rising. Now, we notice that as the ADX starts to rise, so does the price of coffee, which is interesting. The ADX, remember, does not indicate direction of trend. It only indicates the strength of the trend. So even though this is rising, it could have been rising in a down market. And I'll show you that in another example. But in this example, we're looking for 3 things. The price action to be near a 55-day high or 55-day low, a sideways setup, and a rising ADX. And we have all three. Now notice on this day we see that coffee started rising closer to the 55-day high. So what I would do is on this day, I'd place an order to buy on a break of the 55-day high. Now notice the next day the 55-day high breaks. We had the sideways setup and we had a rising ADX. So you would have gotten long coffee on this day. Okay, so that's a clear example of how to use the 55-day channel breakout setup with a sideways setup and the ADX. Okay, that was a long example. Now let's use a short example. So remember, the first thing we're looking for is the price action to be near either the 55-day high or the 55-day low. This is the chart of the euro versus the dollar currency pair. So we see here that the price is near the 55-day low. Notice how the black line is horizontal for more than 5 days. So we have our valid sideways setup. And notice here, starting on this day, we have blue ADXs, which means we can now start entering orders to get short. So on this day, we'll place our first order to get short on a break of the 55-day low. Now on this day, nothing happens. The next day, nothing happens. But the next day, we get short on a break of the 55-day low. Okay? Why? We had a sideways setup, we had a rising ADX, and price action near the 55-day low. So this is an example of using the low, the 55-day low, to enter the market. I will be showing you many more examples in a future video. Now, let's move on to the next video. See you guys in the next one. Bye.